Warren Buffett, he's known for going against the conventional market wisdom, and lately it seems he may even be going against his own commandments. The billionaire investor trying to stop Kraft from issuing stock to buy Cadbury. At the same time, he is all aboard selling Berkshire Hathaway shares to pick up Burlington Northern. Our next guest isn't sure that this makes a whole lot of sense. With me now is Charles Ortel. He's the managing director at Newport Value Partners. And Charles, good to see you again.
Thanks for having me on, Betty.
Isn't this all just a case of Berkshire seeing valuations differently on Kraft and on his own company?
Well, supposedly Ralph Waldo Emerson said foolish consistency is the hobgoblin of small minds, and there's no question that Warren Buffett does not have a small mind. That said, if you look at a book that he claims is his Bible, The Intelligent Investor by Ben Graham, the last thing you really want to sell is your own stock if you believe it's going to be on the upswing. And I take his point with regard to the Kraft Cadbury bid. I mean, Kraft bought its shares back at 33.
Right.
And now they're talking about maybe issuing some stock at 27-ish, and on the surface that doesn't make a whole lot of sense. But the discrepancy in the case of Buffett is much wider. I mean, his peak price was over $140,000 on the A shares around December 2007, and now to be issuing them at around $100,000 to fund an acquisition, the likes of the Burlington raises a lot of questions in my mind.
It does, but one of the hallmarks of a great investor is that you adapt to some changes. And one of the changes at Berkshire is that, look, he's getting to the end, you would say, of his tenure there as the CEO and the CIO, essentially. The company has as much cash as it has ever had. He's got to do something with this money. The Burlington deal is so big that perhaps he couldn't use all of his cash. And he also talks about the fact that Burlington shareholders get a tax-free option in this and makes it more attractive then. So aren't some of these enough to outweigh what you say, which is going off track for him over the last 50 or 60 years?
I would say no. I mean, I think, lesson 101 from business school is you never confuse the financing decision with the investment decision. And we're talking now about the financing decision. Does it make sense to finance this acquisition with depressed Berkshire Hathaway stock? And I would say on the surface, no. If Warren Buffett wanted to sell a passel of 50, 75, 100-year bonds to finance this acquisition, my guess is he could probably do it. So on the financing side, I have issues. If you want to talk about the investment side, I also have issues on whether the acquisition itself is consistent with his past success.
Now, I know, Charles, you've been critical about Buffett and about some of his moves that he's made, not just recently, but it was also over the last 10 years or so. But in your opinion, though, I mean, he's getting all of his ducks in a row right now. In your opinion, in your view, what, though, has been the smartest move that he's done so far?
I think, over the course of years, he made a series of astute sort of rescue preferred stock with warrants investments that other people couldn't make in the past decade. And those investments were very, very smart.
The Goldman deal smart?
Well, no, I'm talking about, earlier on.
I know, but I'm saying, but what about the
Goldman deal? In theory, looks smart if you judge just the results, but is it consistent truly with his investment thesis? I mean, is Goldman really simple to understand from the outside? Has he done well always in financial services? Was the scale of that investment material to the whole consolidated business? I'm not really sure it all fits well. But my biggest criticism here is that it echoes his own words. He's built up a massive pile of assets here. He himself says it's going to be tough to replicate his early success.
Right.
Why make acquisitions? I mean, why isn't this a good time to rationalize his business and maybe get out of some of the slow growth, smaller businesses that he owns, or at least divide the company in two, perhaps?
Okay, Charles, we're going to have to leave it there, but thanks so much for joining us. Charles Ortel of Newport Value Partners.